Head and shoulders is the most famous reversal pattern in technical analysis. It's also the most over-identified. Traders see any three-bump structure and call it HNS, draw a neckline, and short the break. Most of those breakouts fail because the pattern wasn't actually HNS. It was just three random bumps. The textbook pattern has very specific structural and volume requirements, and when those requirements are met, the pattern produces one of the highest historical win rates of any reversal setup. Today, the structural rules that define a real HNS, the volume profile that confirms it, and the neckline break filter that turns the pattern into a tradable signal. Here are the 4 rules. 1. There must be a prior uptrend. A reversal pattern needs a trend to reverse. HNS in a sideways market is meaningless. 2. Volume peaks on the left shoulder. The left shoulder is the last move of true bullish momentum, and volume should reflect that with the highest reading in the pattern. 3. Volume declines on the head and especially on the right shoulder. The head's new high on lighter volume is the key tell. Bulls are pushing higher with less conviction. The right shoulder on even lighter volume confirms exhaustion. 4. The neckline break must come on expanding volume, institutional commitment to the reversal. Miss any one of these and the pattern is unreliable. Watch this in a synthetic chart. A trader sees a 3-bump structure in a sideways market, draws a neckline through the troughs and shorts the break. Volume is flat through the entire pattern, no clear peak on the left shoulder, no decline on the head, no expansion on the break. The breakout fails within 5 bars, price climbs back above the neckline, and the short is stopped out. The structure looked right, the volume profile was wrong. Without the volume tell, the pattern is just 3 random bumps in noise. Here's the key. The volume profile is the entire signal. The structural shape can be approximated by chance. Random walk produces 3-bump patterns regularly. What can't happen by chance is a consistent volume decline across the 3 bumps that exactly matches the bullish exhaustion thesis. When volume peaks on the left shoulder and declines through the head and right shoulder, you're seeing the actual flow of conviction draining out of the trend. That's the reversal signal. Without it, the shape is decoration. Now the textbook pattern. Prior uptrend established. Left shoulder forms on heavy volume, clear bullish push. Head makes a new high on visibly lighter volume, bulls pushing harder for less result. Right shoulder forms on even lighter volume, exhaustion. Then the neckline break candle prints on a sharp volume expansion, sellers commit. The trader enters short on the break, stops just above the right shoulder, targets a measured move equal to the head to neckline distance. All 4 rules satisfied. This is the famous HNS trade that delivers high win rates, and it's nothing like the random 3-bump patterns retail traders short every week. On a real chart, before shortlisting any HNS, check the volume bars at each of the 3 peaks. Left shoulder should be the tallest volume bar in the pattern. Head should be measurably shorter. Right shoulder should be the shortest. If that ladder of decline isn't there, the pattern is decoration regardless of how clean the structure looks. Apply the volume test ruthlessly and you'll find 1 or 2 real HNS patterns per stock per year. And those 1 or 2 will deliver almost every famous HNS trade. So, real head and shoulders requires a prior uptrend, a volume peak on the left shoulder, declining volume through the head and right shoulder, and an expanding volume neckline break. Most 3-bump patterns fail at least one of these rules and aren't worth shorting. Apply the volume test and trade only the textbook versions. They're rare, but they're the patterns the textbook was describing. Subscribe for the full method and trade your own plan. Education, not financial advice.